So car insurance has gone up over 37% since 2021, 2022. In 2023 didn't look any better. It actually went up over 20% in 2023. So essentially, some companies have increased almost 40% in premium for your car insurance. Now, that's not everybody. Some people did get affected, and there's a small amount of people that didn't. Let's go over and explain some in-depth details on what's causing these rate increases, but also what effects individually will have on your policy and how much you can expect it to increase based on what incident has happened. So in general, let's explain the generalized version that you're going to get from almost every insurance agent you talk to, myself included, because it's like, if you get too far in depth, there's 1,000 questions and some of them just can't be answered. I spent an hour on the phone with one of our carriers, and I still didn't get an answer from them for a rate increase. Some carriers don't share publicly the data, even though legally they do. There's websites that you've got to find a website in a website on the government's website, and you find those answers. They're out there. You just either pay a ton of money to have somebody go find them, or you go find them yourselves. This is what this whole channel is built around, is helping you guys understand why those changes are the way they are, and how can you fight against them to get the best premium. We already know that the cost of value of cars have gone up. That's just in general. But the other part is the production has lowered. If you see in the news, some of these articles you're going to read is GM and Chevy and all these companies aren't selling their trucks as much, or they're not selling their cars as much. And essentially they've ran out of their customer base on the vehicles that they've had. This happened over a decade ago when they essentially went bankrupt, and part of that was because there's no one to sell to. The economy had crashed, and so on and so forth, and then we had a big boom, and now it's crashing again. The ability to get the parts for the cars has slowed down. That's created kind of a finite, we need those pieces. Guess what? Price goes up because there's more cost in labor, more cost to keep the shop open. So these dealers and these parts manufacturers are having to charge more just for the same part. That is in addition to the cars themselves are getting more technology friendly. They're great, they're saving lives, which is super powerful, but it's at the cost of your insurance. Let me reverse that. It's not just your insurance, it's the cost of everybody. It's the cost of the car, it's the cost of the repair, even if you don't have insurance, and it's just the cost of doing that good in the world. Some cars have it so if you crash into somebody, the airbag will go off in front of the car and save the life of the person, potentially. There's other ones that have airbags that are $4,000. If you look at an article for the Rivian, that truck is really cool looking and awesome, but someone got in a fender bender and the insurance ended up having to pay what you would expect is a $500 fix. It was $40,000 to repair that vehicle. It was just a fender bender. That bumper was built and molded into the side, which was built into the front of the car. So that whole vehicle is all one piece. Guess what? Now that the insurances know that's a repair, the cost to insure that vehicle is probably tripled. Don't get me wrong. I don't think all insurance companies are in the right, but in this scenario, a lot of the costs are due to the cost of repair and the cost of the sensors and the technology and the 12 airbags that are now in the car, which is great things, but there's a cost that we're going to pay for that. In addition, an article that I read for New Jersey specifically, but it probably falls through Texas and Michigan and Virginia, Ohio, all of these states that we typically look at, and most states are going to follow this, is the laws have gone more friendly towards lawyers because there is a lot of people that need that help and advice, but then there's also those people that don't necessarily need that. They do and they don't. I'm not the guy to say that. But because of that, insurance are paying out more in lawsuits for those reasons. There's real reasons people like you and I need to have those lawyers to protect us. We need that protection to fight against companies that say no without looking twice. In the other cases, the people that kind of use it in their favor that don't necessarily need it or shouldn't be using it, where they know they're in the wrong, but they still can fight and win. In those cases, our price as a collective community here in the United States is going up in general. It's not an option we have. It's just part of the way that the system is combating the wins and losses. Keep in mind, these are insurance companies. They're trying to make a profit. So in order to do that, they've got to combat that piece with the rate increase. One of the larger pieces, and a lot of states are starting to outlaw this because it's being fought that it shouldn't be this way, but insurance scores or credit scores play a huge factor in the states that allow this. So states that allow credit scores to be a factor, I'm using this as from an article, said that about $90 was the average of a really good credit score. That was the monthly payment. for someone that has a poor credit score can pay as high as $212 per month for that same policy. We might have to break that open and say, hey, let's figure out why that's such a big difference and let's fix this, because it's the person that's down is getting hit twice as hard, not just insurance, everything. All credit related things are affecting that, which is ruining their credit even more to the point to where they can't get out of this hole. That is not always the case to where you start getting in those mid-tier credit scores. I've seen it. Honestly, I can agree where the lower score rated credits tend to have missed payments and tend to have more service issues and tend to have that's a given. But $120 difference swing in price, that depends on the company. Keep in mind, not all states that allow credit are used for credit. So there are companies that don't necessarily use your credit score to determine those rates, even if they're allowed to. That's why you're seeing some of these companies pop up in the news like, oh my gosh, these rates are great. And as long as they can sustain that and they can have a good rate for that, then you're in a good situation. By the way, if you are shopping around and looking for car insurance, I'll put a link in the description below that you can work with multiple companies. Having an independent agent that can shop these different companies, if you have good credit, maybe you get a good company. If you don't have good credit, there are other companies that are available to you. Feel free to fill that out below. Let's dive into the actual claims tickets and what affects your price on car insurance. These are more based on what things that you as an individual have done or can do that causes your rate to increase. So essentially the data from this is 8,500 insureds, company customers, you and me, have been used for this survey in about 45 different companies. So there's a lot of data behind this. I'm using a company called MarketWatch, and they've got some pretty good information. So let's take the standard speeding ticket. We'll get into accidents and DUIs and things like that here in just a moment. But if you have a standard speeding ticket, the most common one is 1 to 5 or 5 to 10 miles over the limit. Something like that is going to cost you about $409 per year additional insurance costs. Now, if you have a larger ticket, which is 16 plus, now you're getting closer to $500. And then when you go over 20 plus, you're talking $650 per year additional. It's like $649 and some change. Now, the most common ticket you're going to see is a failure to yield or a stop sign. The stop sign tickets actually are a little bit more than your basic speeding ticket. Those are closer to that $450 to $500 range in increase per year for your insurance, because stopping at a stop sign is a higher risk for having an accident. Having that accident is where the insurances get scared. They don't care as much about speeding tickets versus having 1 to 2 to 5. As those add up, which we'll talk about here in just a moment, those start to become more risky, but the stop sign violation is a larger risk for insurance. So to give you the exact numbers, I'll read it right from the chart here. 1 to 5 is about $34 a month extra. Stop sign is about $39 extra. Speeding 16 to 20 is $41 extra per month. Speeding 21 to 25 over is $54 per month, which not a lot of states even do the 21 plus. It's usually 16 plus now. So you're in that range. And those are your common speeding ticket violations that you're going to see the cost raise in insurance. I typically say whatever you're paying now, at about 15%, no matter what speeding ticket is, that's a good average of what the cost you can expect for a speeding ticket. You see how little of a difference in cost it is, because it's a speeding ticket. Once it gets over, yeah, it can go from 34 to 54, which is almost 50% more, but you're not going to always see that with most companies. If it's the first incident, they don't care as much as if it's the second, third, or fourth incident. Okay, but what if I have an accident? If you have an accident, there's two ways they look at this. You can have an accident with the speeding ticket, which they just take the worst of the two, so they just remove one, keep the other. Or you can just have an accident without having that. Having a single accident is about $73 per month on average, more across this research. I typically tell customers, usually if you have an accident, if it's your fault, you're going to see about a 20% increase. If it's not your fault, depending on the state you're in, you may not see any increase. I just made a video about that actually, and I'll link it at the end here so you can research a little bit more whether at fault versus not at fault and how that affects your insurance. Where it matters the most is if you have a second accident. The second accident, even in those ones that are not at fault, tend to rate against those harder than if you had just one. That's even for the states where you don't count the one not at fault accident against you. When you have a second, typically those states have broken that open to say, okay, we get it. Insurance can't just pay everything because then there wouldn't be a company. That's why you see some states losing companies. It's because they can't afford to stay there. There's too many claims, or that insurance company can't stay in that state in general. So having that second accident, whether it's at fault or not at fault, is going to play a big factor in the cost. How much? It's an average of about $162 per month. That's almost $2,000 per year more if you have 2 accidents on your record. I get it, it's a pain, it's ridiculous, but it's the risk that you're taking. Now, there are ways to fix that, and we'll go over here in just a moment, but essentially there's one more after that. If you have a third accident, that's where we're starting to get in some high increases in premium. Having that third accident is going to cost you about $300 more per month, almost $3,600 a year when you have 3 accidents on file. Now, I get it. Some of you are in the comments, and you should be. That's fine. Let's talk about this. There isn't necessarily an exact formula for this because we have our state laws, and those state laws have determined what sandbox these insurance companies can play in. So when the rates go up and down and all that, the state law kind of determines that. There's an insurance department that handles that. And then inside of that, these companies have to adjust their rates based on what the risk is. Apart from that, they look at the individual person, that's you and me, on how, where, what, why, and when. How you have an accident, if is it at fault, not at fault, okay? Have you had any speeding tickets? All of these things. You have 5 incidences on your record, 2 speeding tickets over 5, 1 over 6, 1 not at fault, 1 at fault. Okay, that person is going to pay a considerable amount more than the person that has just 5 not at fault claims. It's all about that risk percentage based on what they expect to take in premium versus how much they have to pay out. I get it, Mark. That's common, right? That's what we expected insurance to be. They take in our risk and they put out a percentage. Yes, but here's the trick. Not every company does it the same. That's what makes it a market. That's why you can work with an independent agent who shops all of these companies. They look at Nationwide and they look at Allstate and they look at Progressive and they look at all of these different companies that are available to them that they've essentially got appointed with. And now they take your profile and run it through each of those companies to find out State Farm cares about this. Nationwide doesn't care about this. These companies care about that. So you can determine based on the risk that you have versus the price you want to pay versus the quality of the insurance company, because not every company is the same. Based on this whole channel, you can tell there's a ton of reviews on of a ton of different companies. Some have passed the mark and people love them. Some hate companies. You're going to hear it all over the board. But every person is a different fit for every company. That's why insurance gets confusing, is because you really essentially need an agent that's been in the industry that knows what they're doing. Now, on top of that, we didn't talk about DUIs. DUIs add about $122 per month, and that's just on top of everything. Honestly, the way I see DUIs is you're either a fit or you're not. That's like a black and white, right? There's no gray area with that. Some insurance companies don't care, and they actually give you a decent price. And other insurance companies, you're just not even going to have a good price. They're just going to say, we're going to triple the price. We essentially don't want that risk in our profiles. When you add that on to some of these pieces, honestly, from what I can tell, you're probably just adding that cost on top of it. It's almost like it's its own separate category. The one piece that I don't see a lot of these articles talking about, and I understand why, because hopefully this isn't getting too confusing, is medical. Whenever an insurance claim involves medical payout, that is the highest risk an insurance company can take. If you're one of those, it's an unfortunate thing, but it doesn't always affect, kind of like what we just said. Each company determines each differently. Don't think that because you had a medical payout that you're now the worst risk, because it's not always the truth with all of them. But with your top tier companies that want the cleanest, best, their system is designed for that person that's willing to pay a little extra, that wants that best type of policy, the quick service, all of those pieces, they're not going to be a good fit whenever you've had some sort of medical payout. Those insurance companies care the most about. Okay, Mark, but all of this is great and fine and dandy. Let's talk about my age. I'm 16, I'm 22, I'm 35, I'm 50. You say 50 is the best place. Why can't I find that best rate? It's all based on the age. Age is experience. The amount of experience you have driving is tied to the age that you have. You're going to see in every other video I've made when we talk about age, 50 is that sweet spot and 16 is the worst. 70, I think 5 is the worst as well. So it goes out again, and in between it goes cheaper and then more expensive. So as you get older, it also plays a factor. It's tied to claims. In all honesty, it's risk, experience, and response time. When you get older, the response time slows. So if you have claims, it just happens. When you're younger, you're typically learning, more claims happen there. I'll give you some numbers. So 16 is about $6,900 per year if it was just you alone getting a policy. And there are ways to bring that down, and there's videos on this channel that go over that. 17, close to that, it's about $1,000 less. You're $5,600, 18, $4,900, 19, $3,700, 21, you're about $2,800, and then 25, $2,000. Notice how it starts to slowly go down. 26 is essentially that sweet spot where they say 25 and older, or 26 and older is where it plays a factor. But a lot of people say, why didn't my price drastically drop? It's not in half. It never will be. It's slowly changing as your age changes. For example, 25 is $2,019 versus 30 is $1,831. Notice how it only changed about $170, $190-ish per year by the one gap between the two ages. Once you hit that sweet spot, which is 45 to 50, now you're $1,700 to $1,600 per year on average, so you're seeing that drop. Where it changes and it stays about that $1,600 range, once you get into the age of 75, it goes back to $1,900. So that gap isn't massive. When you're 75, you're not going to get the same price as when you were 16. It's still a third of what a 16-year-old would have. It's just going to creep up as you get older. Once you get past that 80 range, then it goes up a little bit more. So you'll probably be closer to that 21-year-old when you're hitting 85 and 90. Okay, well, I went this far. I might as well tell you what states have the best and lowest rates. Based on this Market Watch report, Michigan is still the highest, followed by Florida. I don't think that's true anymore. I think that's almost flipped. Michigan is very high in insurance. An agency that I work with is based out of Michigan, and their average premium is about $3,000 per year, which in Florida, if you have home insurance, that alone is $3,000 per year. Their auto has creeped up quite a bit too, to where those weather claims and everything like that has gone up. But in general, you've got Michigan, you've got Florida who are battling that out. Along comes Louisiana, who is also very expensive. New York follows suit, Massachusetts, and Connecticut. Those are your top 5 most expensive insurance states if you're looking at somewhere to live. The cheapest ones you're going to see is Maine, partially because I believe Maine doesn't actually have restrictions on the insurance. It's one of those few states I haven't really done a ton of work on, but I want to say that they don't require you to carry insurance. You can self-insure. Take that with a grain of salt. I'm not an expert there. You got North Dakota, Indiana, and Ohio, although Ohio has creeped up a lot. Ohio, I've seen a lot of increases. So if you're in Ohio, definitely check the link below because there are some companies that are still competitive there versus if your rate has gone up quite a bit. Since this is this long a video, if you're this far into it, let me know in the comments below. I'm going to go a little bit further in depth on some of these pieces you may want to know. I'd love to hear that you're still here because it helps me understand. If I'm just super long-winded, I just shut up and cut this into 5 videos, or if you guys are okay with having these long-form videos. So let's talk a little bit more about the credit score because we talked about how that can affect a ton. And one of the pieces that the Market Watch did a really good job with was breaking this up into pieces. What affects that credit score, so to speak? 35% of it is, according to them, is payment history. 30% of it is the amount that you owe. So if you have previous debt that you just haven't paid off, that's the same as any credit score. I have 5 credit cards, and the length that I've had credit score, that's 15%. And then 10% of it is my mix of credit. Some's credit cards, some's a house loan, some's this, some's that. So that's pieces that they're calculating this. And then 10% is new credit. If I went out and got a new car loan, if I went out and got a new credit card, that plays a small factor. So 20% of it is either the type of credit or the newness of credit. And then the larger piece is the payment history. Am I making my payments on time? And that follows suit with a lot of these companies. So what are ways that you can fix this? What are some things that you can do today to fix it? Credit, like we said, is a big factor in states that allow it. If that is the case, then work on that. Make sure that you're up to date with credit. That's more of a long-term play. You're going to take years to build that up, and that's going to help you in the long run. The number one way, which I hate saying it because all these companies and agents and all these articles are meant to get you to shop, but that is the best way, because if you're not a fit for company A, yours company C, B, D, all of those companies, one of them likely will be a fit. Working with an agent that can do that, that's what that type of agent will do. I'll put that link in the description below if you guys are shopping. If not, talk to your current agent. They can probably help you out with some of these pieces. 2, if you're buying a new car, choose the car that you're choosing based on what you can afford. recently had a customer do that, and we decided that they had to go with a different car because the difference between the car they wanted and the car that they could afford was about $90 a month. The other piece is the video I just made, which is combating this with UBI, usage-based insurance. We call it telematics. That's essentially you take up your phone, you plug in your car, they load it in, they watch you drive for 90 days. Some go further. I'll link that video. But essentially it watches your driving history and you can get 30, sometimes 40% off of part of your policy. It's not the whole thing, but it still helps. It makes a big impact, especially if the rate went up and you have that 30% discount. Now your rate didn't go up because you had that UBI or that telematic system built into the price. For those that you drive lower mileage, that's an option. Not as big of a thing, but let your insurance company know that you only drive X amount of miles. And based on that, some to most companies will give you a discount if you drive less than a certain amount of mileage. How much? Commonly 5,000 or less is the best. And then sometimes they'll give you a discount if you're lower than 8,000. That's per year. Now, the other part is there's a ton of other discounts, and I can go over them all day long, but I've probably got 6 or 7 videos on this channel that go over the actual discounts that are available. But I think you guys have had more than you can handle. If you're writing notes, if you're this far, you gotta let me know. We gotta say hi, right? We gotta just virtual shake hands. Thumbs up, thumbs down, let me know what you thought of it. In general, your next step is to do what we just talked about. If you're trying to understand a little bit more bite-sized of what's happening, I'll link my video here that goes more in depth on that. If you want to go over some of these discounts that I just started to mention, I actually have a video that goes into depth on that as well, my car insurance video that goes there as well. Now, there is other videos on this channel that will be helpful. There's an Insurance 101, but these are the 2 that I would start with first. I'm Mark with Think Insurance. I'll see you in the next one.